Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Market and Sector Analysis. And I think we've all heard this concept of buying low. Sounds like a good idea, but how do we buy stocks low when major market indices are trading at or near all-time highs? That's kind of a conundrum that a lot of traders might be encountering today. So what we're going to be doing with our time together today is looking for stock reversals on maybe stocks that have been somewhat out of favor, out of the limelight, but that are within what appear to be emerging sectors. Should be an interesting discussion. We're looking to buy low in high markets. That's the concept today, so should be a lot to cover. Before we get to that, though, let me first of all say hello to everyone who's chatting in. Great to see all the familiar names again. Hello to anybody that might be new. I'm kind of an interloper today. I'm filling in as your presenter. But hello there, Sharon and Michael and David, Jay Richardson, Greg, everybody else. Jackson, great to see you, but great to have everybody back. Thanks for giving us your time and attention each week. If you're here for the very first time, I want to welcome you as well, though. And I also want to welcome anybody that might be watching on the YouTube archive after the fact. Enjoy those recordings. That is a great way to watch these webcasts. But if you'd like to be here in the live audience, this is a Friday webcast series, and we kick things off promptly at 3 Eastern time each Friday. I also want to let everybody know here in my live audience that my very good friend Scott Thompson is hanging out in the chats with us in YouTube today. He's going to be keeping an eye on any questions that come in. If I can't get to those questions, Scott's going to be there to pick up the slack for me. I've been working with Scott for 20 years now, so he brings a ton of experience to this discussion. Great resource. Thanks for having my back there, Scott. Scott and I would also like to throw out an invitation to everyone watching to follow your favorite Schwab presenters on social media. You can find us on X. You can find us on LinkedIn. You can find Scott there on X at Scott Thompson CS. You can find and follow me on X at Cameron May CS, or you can hop over to linkedin.com/in/Cameron May CS. Find and follow and comment on my post there. But let's get into this discussion. And as we do, of course, we need to consider the risks associated with trading and investing first. This is important information, so please bear it in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that said, let's set the agenda for today's discussion. And the difficulty, the trading difficulty that I wanted to address today is the trouble that some traders might find when stocks have been so cooperative. Hey, as a bullish trader, that might be great for previous trades, but for new positions, we might struggle to buy low with the hope thereafter to sell high if everything's already up at highs. So today we're going to be using some tools available on Thinkorswim desktop platform to examine sector strength and find maybe a sector that appears to be shifting from out of favor, possibly into the limelight. And then we're going to scan within that sector for stocks that might be reversing from recent lows. And then we're going to plan to place a trade from that scan. But the very first thing we're going to do is you're just going to go have a look at the markets overall, what's going on with the S&P, why are traders struggling to find stocks at or near lows? Well, it's because major indices are trading at or near highs. If you look at the S&P on a one-year daily chart, you can see that for about 3 months, the prices really struggled to stretch above that 7,600 point level. But we finally pushed up and through that and started to fade back a little bit for a couple of days. That's kind of interesting as we pushed up to all-time highs just a couple of days ago. Looking back over the week leading up to that, you technicians, what might we be seeing here? Let me zoom in on this. We had this comparatively explosive move to the upside over those, 6 market days. S&P went from 7,300 up to 7,800, a 500-point move in a week, basically. Well, when there's that strong of a move, sometimes we'll see some profit taking, maybe as some people who just made a lot of money, maybe some traders skimming a little bit of profit off the top, whatever. We started to pull back here for just a couple of days. That's historically, again, from a traditional technical perspective, somewhat proportionate. When we have a run up for 5 or 6 days, maybe we might see a pullback of 2 or 3 days. That might be a typical technical assumption that doesn't always work that way. A little bit of a bull flag going on here, possibly. So if we're just starting to gain some strength again, maybe stocks are set to run to the upside. And could it be another 500-point swing? We'll see. But things have been doing pretty well for the S&P. But I want to put that into a broader context now. That's sort of what's happening right now in 2026, first week of August. But I wonder, as we look into the rest of summer and we start to plan ahead for maybe fall, has there been a seasonal tendency for the markets to move in one direction or the other? Let's use our seasonality chart for just a moment to get that broader perspective. I'm going to zoom back out here for just a moment. Let's clean up this chart. I'm going to right click. Let's clear the drawing set so we have a nice clean S&P 500 one-year chart. But I'm going to switch the style of chart now from a standard candle chart to the seasonality chart. I realize with 108 people watching live, not everybody's going to be familiar with this seasonality chart, but what this does is it looks back over the last 20 years, and then it shows us what the S&P has done on average in an average year all throughout the year. So it kind of creates a hypothetical year, but based on historical movements. So I'm going to choose the seasonality chart here. And that leaves us with two lines. We have a green line, we have a red line. The top line, the green line, is just what the S&P is doing so far this year. So this is back to January 1st to August 7th, what we were already seeing on that candle chart. But down below is what happened last year. I think it's interesting that this year so far has been pretty much a mirror repeat of last year. Not exactly, obviously. Day to day, week to week, there can definitely be fluctuations in that. The timing of this dip here was a little bit earlier in 2026 than it was in 2025. Interesting. But that's comparing a data set of one year, against a data set of one last year. Let's extend that out. I'm going to come up here to the time frame, and let's go out to a 20-year one-day chart. And then we still have 2026 up here. But down below, this is an average chart for the last 20 years. And I want to turn our attention to that. So I'm going to zoom in on that. Let's use our little right axis tool. If I switch this to manual, it allows me to come down here and do a click and drag zoom on that, just that seasonality chart. So if you didn't follow what we're seeing now, this is basically from day to day what has happened on average, like it's showing us on average what happened on April 1st, what happened on June 2nd. It just day to day is showing us the average performance of the S&P 500. And so we can kind of orient ourselves with, well, today's August 7th. I wonder, on average, what has happened from August out through the rest of summer. And actually, there has been a pretty strong tendency over the last 20 years for not much to happen. Kind of markets going up and down, but mostly going sideways through this time of year until about the middle of October. So what that might imply is that for our investors, if 2026 goes like an average year for the last 20 years, maybe don't get too excited. Maybe be patient. For the traders, though, it might cause them to adjust their approach. All right, buying for longer periods might not be very productive if 2026 goes like the average has. There's no guarantee that it's going to, but maybe more swing trading, more shorter term stuff. We'll see. Obviously, 2026 will go however it goes, but I think it's interesting to get that longer term seasonality perspective, because we hear things repeated about the markets, sell in May and go away, that kind of thing. Well, if we sold in May over the last 20 years, that would have been a terrible idea on average. It's more like the summer doldrums arrive around the third week of July, but then persist till about the middle of October. That may be the new reality, or maybe it's just an aberration over the last 20 years. But let's zoom back out again. Let's switch this back to a 1-year chart, and let's set our chart style back to just the traditional standard chart. And let's dig into this a little bit deeper, because this is how things have been going up till today. Lots of stocks pushing up at or near all-time highs, but not all of them. So what I want, the challenge that I want to issue to ourselves today is to look for a sector that hasn't necessarily fully participated in all of this growth, but maybe its day has arrived. So let's go, I'm going to take a sort of a stepped approach into seeing how a trader might find those kinds of sectors. First thing I need to do, though, is I want to introduce or recruit a tool that some traders might use in this effort. It's known as relative strength. Let me know if you're familiar with the relative strength indicator. Not the relative strength index, not the RSI, but just plain old relative strength. And as you do, I'm going to switch up our chart. I'm going to bring up the NASDAQ composite, $COMP, and then I'm going to come up here to our little flask icon, and let's add the relative strength tool. Oh my goodness, if I could just type relative strength. There we go. So I'm going to add this to our chart. If you want it summarized, relative strength compares one stock or index to another stock or index. The RSI, which sounds very similar, relative strength index, compares a stock or index to its own historical track record. That's different. All right, so let's select relative strength. And by default, what this is going to do is compare whatever we have on our chart to the S&P 500 to see which of those has been stronger over the time frame of the chart. So we have a 1-year chart. This is going to look at the NASDAQ and see if it's been stronger or weaker than the S&P over that 1-year period. So let me click apply and click OK. And with the relative strength, if you're not familiar with it, it has 2 lines. The red line, just think of that as how the S&P has done. The blue line tells us how the NASDAQ has done relative to the S&P. So there are times when the NASDAQ's performance has net been stronger than the S&P. Our blue line will be above the red. There are times net since the start of the year where the NASDAQ has overall underperformed. Well, that's nice. We could just actually throw them both up on the same chart at the same time, but I'm using this tool for a specific reason. Let's just focus our attention on this blue line. When the blue line is going up, what that means is that during that time frame, the NASDAQ has been essentially outperforming the S&P. And there can certainly be times when both of those indexes are going up, but if the NASDAQ is going up faster, you'll see this relative strength line still going up. If the S&P has been going up faster than the NASDAQ, we'll actually see this blue line going down. That's kind of counterintuitive, but that's the way it works. But what for some traders might be interesting is when there's a shift in the performance of the NASDAQ versus the S&P 500. And so what we're doing here is I just want to see, well, if we're going to go look for a stock today, should we direct that search toward S&P stocks, or should we direct that search toward NASDAQ stocks? What does the market seem to be currently sort of favoring? Now, just because it has been favoring it doesn't mean it's going to continue doing that. But here's a technique sometimes employed by traders who use the relative strength line. They'll draw support lines under an upward sloping relative strength line. And the interpretation here would be, oh, okay, looks like from August of last year until the first week of November or so, the NASDAQ was outperforming the S&P. But on that chart, you'll notice that outperformance started to slip. NASDAQ is still going up on the price chart, but maybe the S&P is playing a little bit of catch up at that point. But when we get a crossover, when we start to see a reversal of the relative strength of the NASDAQ against the S&P, that might be a signal that maybe attention is shifting to a new corner of the marketplace, right? So here we see the relative strength slipping down, indicating, yeah, maybe some weakness of NASDAQ securities versus the S&P, and that might cause the trader to shift. And as we start to establish a downward sloping trend line, maybe we draw a resistance line across the tops of that line. And here we're just looking for reversals. Let's see. Jay Rich says relative strength looks like an inverted head and shoulders, an IHS. I'm assuming that's what your abbreviation there means. Do patterns on relative strength matter? Good question. The short answer is no. Nope, not really. The difficulty, like I think what you're looking at is this little thing right here, inverted head and shoulders. There, with price patterns, they're built with a bias toward kind of long-term upward trending. An oscillator like the relative strength actually goes sideways over the long term. It doesn't really work the same. So no, it's not traditionally a practice to look for price patterns on an oscillating indicator. Very good question. All right, but notice what happens. Maybe sometimes when the relative strength weakens, it might precede an underperforming period for that index. Notice when the relative strength starts to strengthen, it might indicate that there may be a stronger period for that index coming. Again, nothing's a guarantee, but that's a common interpretation. But with the NASDAQ, what's currently happening? It still looks like downward slope. Maybe we're teasing against that trend line. I don't see anything terribly convincing just yet. So that might mean that the NASDAQ securities underperforming the S&P. Maybe we'll keep an eye on this and see if that changes. But let's direct our attention to S&P 500 companies today. So within the S&P now, let's look to see which sectors seem to be the strongest. Trader Joe says, trader I know and respect uses another platform, only enters trades with RS over 90. Could it be that his RS indicator isn't comparing to SPX? It certainly could be, Trader Joe. I have no idea. I don't know that trader's system. I'd have to ask a lot more questions. But let's shift our attention, but using this new tool. Let me throw in one more trend line. Why not? I do note that looks like our lows were getting higher here. And as we started to break down on that relative strength, that turned out to be, again, a period of underperformance for the NASDAQ versus the S&P. But let's go have a look at the different sectors. So I'm going to come over here. I've kind of cheated and loaded this up. So I'm going to backpedal a little bit. Let me switch up I'll just bring up a different watch list here to show you how I got to where I have this watch list set up. I'm going to customize these columns for just a moment. Let's throw in maybe market capitalization here. Let's add that. And maybe the last price. There we go. All right, so whatever watch list one might have already loaded, what I want to show us how to do is let's have a look at the 11 sectors that make up the S&P 500. And then we're going to look at which one of those sectors has maybe been leading the charge during 2025, 2026. And are there any that seem to be, let's say, emerging? Something that's kind of fallen out of favor, or maybe it's perfectly strong, it's just not as strong as everything else. But first, we need to see those sectors. So Thinkorswim actually creates a public watch list. They create a watch list of the 11 sectors, and they publish that to the platform. And we can find that by clicking on the sector on the headline here, the heading. And we're going to look at the public watch list in alphabetical order down to the S&P 500. It's called sector indices. So you can just think of it as sectors. So there are those 11 sectors, but they also have these kind of weird Symbols. Lots of things have weird symbols. Corning is GLW. That's weird, but that's Corning. But sometimes a symbol doesn't tell you what it's charting. So a couple of ways that we can see what's being charted here. We can click on a symbol, or we can just type it in up in the symbol box. And there's a chart of one of the 11 sectors. But right here is the name of that sector. It's kind of hidden. You can see these ellipses. There's a dot, dot, dot. If I hide this left column, oh, okay, so this is the energy sector. Didn't know that. Hashtag 10, I didn't know that was the energy sector. If I click on the hash 15 or pound 15, which one is this? I can hide that left column again. It's the materials. Well, that's a little bit unwieldy. So a quick way to see which symbol is associated with which sector is to add what's called the description column here. So I'm going to do that. Let's come up here, click on little customize columns. Let's get rid of the market cap because our trader or investor may not care about the total market capitalization of a sector. They're not looking to invest in the sector, but to find something, a stock within the sector. Also, sectors don't really have values. Again, we're not looking to invest in them. So I'm going to remove the last trading price, not a price, just a level. And I'm going to replace that with the description, which is the description of the sector. And let's click OK. And now we can see which sector we have: energy, materials, industrials, consumer discretionary, and so on. And now I can click down through those and apply this sort of relative strength logic. For example, we're on the materials. Materials has been underperforming over the last several months. That's reflected in the relative strength. If I switch to communications, it's kind of similar. Communications was actually one of those sectors that's been leading the charge, outperforming the S&P through most of the last 12 months. However, right about, what is that, fourth week of May, there seemed to be a shift in that performance. There was a little bit of a fake out right back here, but potential shift. And yeah, that sector has now been underperforming for several months. That's different though. If we look at, I think some might be surprised that technology slipped a bit, maybe showing some emerging strength. Lawrence says, wouldn't smart money be looking into aerospace and defense due to a missile shortage? Smart money is a loaded term. I like to think that I'm smart. I have lots of ideas that I think are fantastic for buying stocks and making investments that then cost me money. So one can certainly have a premise. I can't comment on the comparative legitimacy of aerospace and defense because I don't know how that's going to turn out. Might be a good idea. It's a good question, but one phrase that you won't hear me say in this webcast is smart money, because it's kind of a, how would we use it? It's a little bit of yeah, it's just a loaded term, right? If I say smart money, it means you're not smart if you're not doing this. It's not my job to make that kind of qualitative assessment of something. We just talk about it. Yeah. All right. Anyway, we by talk about it, I mean we learn tools and techniques, and it's up to the observer to decide whether that's ever going to play a role in their portfolio. I just teach how they work. Jenny, glad you like it. I try to be balanced in my comments, and these are totally legitimate questions that are being asked. I don't want to undermine the question, but I do like to, I don't know, just put things into context. Anyway, let's have a look at a different sector. I closed my sectors up. I wanted to have a look at what's going on with information technology. Let me close up that left column so we can have a look at the last 12 months for technology. It's had a pretty strong performance net, but it's come in waves. There was a period of over or outperformance that started to lag right about here in early November. Technology underperformed until about April, and you'll notice if we were just looking at the levels of technology, trend hadn't really shifted, but there was a break of the trend line on the relative strength that might have been indicating, wait a minute, something's afoot. There may be a shift happening here. Could there be a reversal underway? Doesn't always work out, but in this case, there was a pretty sharp reversal. We got another reversal again right there in about the first week of June. Look what's happening just now. We have our highs going lower, but we've not definitely, that's too strong of a term. It appears that the relative strength has managed to push through that downward sloping resistance, and maybe there might be a few months of outperformance of information technology in this period of the year where stocks kind of tend to be range bound. That's the premise of this trade. Is that, I'm not beating up on anybody here, but is that a smart money trade? I don't know. Time will tell. But let's look in the S&P index, in the technology sector, and see if we can find some stocks that had been going down, but maybe are showing recent technical strength, possible reversal underway. And to accomplish that, I'm going to go build a scan. So let's go over to our live platform. Yes, there are scan tools available on the Paper Money platform, but I'm going to be doing a technical or a chart scan. It's known as a study filter, only available on the live platform. So I have a fake live platform right here, ready to go. And we're going to go to the scan tab. And the first thing we're going to add to this scan as a requirement is, instead of scanning in all stocks, seemed like the S&P still outperforming the NASDAQ. And by the way, we could have compared other indices, I realize that. But let's direct this to the S&P. Let's scan rather than in all stocks. Let's direct this just to the S&P 500. But within the S&P, we're also going to only scan in technology. So we're going to intersect the S&P scan with the technology. Where are we? Technology sector. There we go. So now we just need to tell the search engine what we're looking for, or the scan tool we're looking for. And what we're looking for is a vague concept. Maybe our trader is looking for stocks that have been going down, but have recently been going up. They're maybe looking for trends that were pointing downward that are now going upward. How can we accomplish that? Well, what we might employ are are trend tools known as moving averages. I'm just going to use simple moving averages. If you're not familiar with those, they're trend lines, sometimes used as price floors and price ceilings, but they're just average prices over time drawn onto a chart automatically. And so the first element of this scan, not the first element, it's actually the third element, but the first criteria that we're going to make is going to be technical. We're not going to use these stock criteria. Let's just close these out. And we're going to replace these with 4 study or chart filters. 1, 2, 3, and 4. Now, our first one is going to be a requirement that a short-term trend line is above an intermediate-term trend line. All right? So let's go to our study menu. We're going to put in a custom requirement. Let's delete this default ADX. We're going to do that each time because we're not going to be using ADX at all here. But we're going to add the requirement that a study known as the simple moving average that's 20 days long, our 20-day simple moving average, is above or greater than a 50-day simple moving average. So let's do simple here. And let's add a 50-day moving average, or a length of 50, and just click Save. So you'll notice as we enter that, it says simple moving average of 20 is greater than a simple moving average of, mystery, 50. So what that might mean to a technical trader is that short-term prices, or average prices over just the last few weeks, seem to be stronger than they've been over the last 2.5 or 3 months. So maybe there's at least an upward trend over the short term. Now we're going to kind of reverse that logic. We're going to require that our short-term moving average is below the longer term. So it's the same process here. We're just going to change one thing. Okay, actually two things. Let's delete this. Let's add a second condition here. Our simple moving average of 20 is going to be less than our simple moving average of 100. So that's looking at average prices over about 5 months, about half the year, basically. So if our short-term trend line is below a longer term, but it's above an intermediate, what may be going on? Well, maybe our long term is down and our short term is below that, but at least it's above the intermediate. Maybe there's recent strength that hasn't been strong enough to get above the longer term just yet. But let's click Save. Simple moving average of 20 is less than our simple moving average of 100. Louise says, what about for bears? What would be a good scan for those bears who want to make bears trades? Good question, Louise. I might have to park that for a future webcast. This kind of logic could probably just be reversed. Yeah. Where let's say our shorter term moving average is above the longer term, but below the intermediate. Yep. And that would probably produce, it would, I can tell you, the opposite results here. So that's sort of the vision behind the trends, but now let's be specific about what's happening today within those trends. First thing that we're going to require is that price is above that short-term moving average. So let's come here to our study. Let's add another custom study. Let's delete the ADX, and we're going to look for price, the closing price, to be above the study known as the simple moving average. We're going to do the 20 here. And if you're having difficulty following along with the logic, it's going to make a whole lot of sense when you see it on a chart. I'll just revisit it there. Let's click Save and click OK. So we're requiring that our closing price is higher than our 20-day simple moving average. So let's work back through the logic again. So price is above the 20-day, the 20 is above the 50, but all of that is below the longer term trend line. So maybe there's a reversal going on that just hasn't gone up very high just yet. The final thing that I'm going to require is that today's price is higher than yesterday's price. So we're getting price momentum right up into the current moment. So same process here. Go to the custom. Let's delete this. Let's add a condition of price, close, greater than price, close, offset by 1. In other words, from yesterday. So we just click Save, we click OK. Closing price is greater than the close from 1 daily bar ago. All right, that's our scan. We're going to run that through the information technology sector. We're going to scan just in the S&P 500. That's pretty limited. Let's see what we get. There are not very many technology stocks in the S&P 500, right? 100 or so. In any case, no, not 100 or 50 or so. Anyway, looks like we have a few that meet all these criteria. And before the webcast launched, I took a quick peek through these to save us a little bit of time. I picked a couple, but I want to look at Autodesk and CTSH. But we really could look at any of these. The scan does what it's supposed to. Why not? Let's just take the top one just to show you the results, and I'll talk through what this is potentially doing for the trader who's trying to find something reversing in a sector that seems to just be emerging in strength. Let me clean off our relative strength here. We don't really need that anymore. But take that off and add our simple moving averages, just so you can see them. Let's add 1, 2, 3 moving averages. One of those is going to be the 20. It's the fastest. How about we make it a nice hot red? One's going to be the 50, a little bit slower. We'll cool it off to an orange. And then finally, the 100. Let's just leave that green. There we go. Click OK and click apply. So here's what our filter just required. First of all, it required that the 20, which is our red line, be above the 50. Is it? Yeah. So our short-term trend line is stronger than the intermediate, but it's weaker than the long-term. So it's still down below that. Then we just required that our price be above that short-term trend line and that it be above yesterday. Does that meet all those criteria? Yes. Palantir, now that I look at it, could our trader say, yeah, there might be a reversal going on? This is in that information technology sector. And are we maybe even reversing up above a previous price ceiling? Could we be on our way to the next price ceiling? Very well, could be. We'll see. But let's look at our other ones that I had pre-selected from that search. Here's Autodesk. What was interesting to me is that this seems to be making higher highs and higher lows again. This is a stock that has not been in the spotlight very much over the last 12 months, but it does appear to be gaining some momentum. Time will tell if that momentum continues. But what common characteristic does it share with the S&P 500? Could there be another bull flag underway? You right-click, we duplicate that drawing. Could we be breaking out and on our way maybe up to this previous price floor? Interesting. We'll see. I don't know. But there's also CTSH. That just looked pretty similar. Out of favor, it's in that information technology sector. The 20 is above the 50, still below the 100. Price is above that 20. Price is also above yesterday. All of that adding up to a possible reversal from lows. These are stocks that are just coming off of lows in markets that have been pretty strong for a lot of companies out there. Yeah, this one looks kind of like, this one might be more of what we call a bull flat. Price kind of went sideways and then seems to be moving above. But guys, hope this has been helpful for you. I know there was quite a bit that we covered. We introduced several technical indicators, technical charting tools. None of this adds up to a guarantee of performance on these trades, but for someone who's looking to buy low, who's struggling, this sort of a scan might help with that sort of an effort. User says, I get a 0 in the scan. I can't set to within 1 bar. My apologies. I would just be guessing at what the little subtle differences might be. It literally only takes 1 click difference, and I don't know what it is. What you might want to do is revisit this webcast after the webcast is over and it posted to our YouTube channel, and you can slow it down and just double check your work. That's what I would suggest you do. Olga, you like that? Very much my pleasure. Everybody, Mary Burns says, wondering why you use the 100 as opposed to the 200. The 200 would just lengthen the time frame of the trend line. It would make it a longer term trend line, but some might make that adjustment. I think they both were serviceable for the concept in my mind. Yeah. So it didn't go a whole lot deeper than that, Mary Burns, just you know. But I'm going to let you go. You've earned your weekend. Go enjoy it. I hope you didn't mind me stepping in to fill in for the market and sector analysis today. I'm going to move back to my regularly scheduled webcasts next week. You're certainly invited to join me in those. I have a new one every day of the week, as long as it's not a holiday or as long as I'm not on vacation. I'm here covering a range of different topics. So to find those, if you're new to our webcasts on YouTube, make sure that you're also a subscriber. Pop down, click on the subscribe button. It only takes a moment to do that. but our Trader Talks channel on YouTube is where you can join these live streams just like the one that I'm hosting right now. You can also find playlists for previous webcasts, or you can do keyword searches through the playlist to find items of particular interest. So for example, if you don't know anything about moving averages like we've discussed today, come here, just type in moving averages. And you'll find webcasts on understanding moving averages. Or if you've never been exposed to the relative strength tool before, let me just type in relative. I probably don't even need to type in strength. Let's just type in relative. And there's a discussion by Mike. There's a discussion by James. Those are helpful. Those would be helpful for you. All right, another suggestion that Scott and I have for you is to follow your favorite Schwab presenters on social media. You can find and follow us on X. You can find and follow us on LinkedIn. You can find Scott on X. Just go to @ScottThompsonCS. You can find and follow me on X @CameronMayCS. Here's my handle there on X. There we are. There's my profile, so you know you have the right guy. And then if you reply to one of my posts here, I just try to reply right back to you. It is the place to communicate with me in between the live streams, or you can do that on LinkedIn. Just go to linkedin.com/in and then /CameronMayCS. That'll take you to my profile. And I post here frequently, like here's a video that I just posted about a technical tool known as the Anchored VWAP. And if you reply to that post with a comment, again, I try to reply right back to you as long as you don't say anything too saucy or too hot. Too hot to handle, right? Politics? Nope, not doing it. Economy? Yeah, we can talk about that. Anyway, everybody, thanks for giving me your time today. Go enjoy your weekend. Thanks for all the thumbs up out there. 104 people watching, and I can see, let me refresh my browser here. 32 people have already clicked the thumbs up. That's always appreciated. It's a pat on the back to your presenter, but it sends a signal at the same time to YouTube to please show this webcast to more people. So whether you're watching live or you're watching on the archive, click the thumbs up. It's helpful. Thanks for doing it. Scott, thanks for helping out. I didn't see a survey, but if you ever do see a survey, guys, if you'd fill that out, that's always appreciated. I will see you next week in one of the webcasts. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.